You know, if you have a company, particularly a smaller one, that you own, you have brand new disclosure rules that you may not be aware of. And if you don't comply, the penalty is up to $500 a day. Joining me on the program this week, Rob Field. Welcome to the program.
Morning, Joel. Good to be here. Thanks for letting me come aboard and help out.
You have done some background research on the Corporate Transparency Act, which has really created a tremendous amount of burden on the small business owner. Once again, just sort of that ongoing trend. Tell us a little bit about sort of the background, if you will, on sort of what's behind all of this conversation.
Well, first of all, you know, over the years, there's been a lot of push by the government to really keep an eye on terrorism and international conflicts and fraud, money laundering. And so they're looking for areas in which they think they can get a better handle. Smaller businesses seem to be where a lot of that activity occurs. And so over time, they've been putting together this Corporate Transparency Act, and starting this year, January of 2024, they're going to enact it and start really forcing people to follow it.
Because the act itself has been around since 2021, if I recall correctly.
Correct. It's in place, being designed, being worked on, and now they're going to get real serious and sort of, you know, put their foot on the accelerator and make it happen.
And you better, and we'll go over this in much more detail as the show progresses. But yeah, bottom line is you better comply, particularly based on the deadlines that are required. Otherwise, it's a pretty significant penalty. So we'll cover that in more detail on this week's program. We'll also talk about some of the planning topics that you might want to review to make sure that your finances are in the best possible shape for 2024. Hard to believe, Rob. I mean, it's February already.
I know.
Goes quick.
1/12 of the year is gone, and I can't tell you all the things that have occurred, and yet here we are.
It continues to accelerate, much like it does for our organization. This year, Nelson Financial Planning, we celebrate our 40th anniversary here on Dollars and Cents. We're not quite that old, but pretty close to it. By some records, it's 35 plus years, give or take. So that makes Dollars and Cents one of Central Florida's longest running radio programs. Also, we happen to be one of the top 25 financial planning podcasts on the World Wide Web. So make sure you subscribe to us on your favorite podcast platform of choice. You can also see Rob and I in the flesh, if you will, doing the show in the Nelson Financial Planning Studios. Yes, we have a studio at our office. If you come by, you can check it out. They'll give you the nickel tour so you can kind of see the studio and where we make the magic happen, as they like to say in the biz. My name, of course, is Joel Garris. I'm a certified financial planner, certified financial fiduciary with Nelson Financial Planning. Again, joining me on this week's program, Rob Field, also a fellow certified financial fiduciary at Nelson Financial Planning. So before we get to this Corporate Transparency Act stuff, Rob, which has really got some meat on it that we really want to share with our listeners, a couple of things happened this past week that I think warrant conversation, I would say, particularly when we look at the headlines.
Of course. Are you referencing the Fed meeting and some of the decisions they made?
I got the Fed meeting to talk about. Also got the unemployment data to talk about that just came out on Friday, and then the tax bill. I mean, that's all that passed the House. That's all three. So I understand the hesitancy, Rob, of trying to figure out which headline I was talking about. But there's a host of them that directly impact your money. So I wanted to start off the show just kind of talking through those three items because they were pretty significant headlines in their own right, all occurring within the course of this past week. So first and foremost, the Federal Reserve meeting happened midweek. They came out and said that they were going to hold rates steady, but sort of change the signaling, if you will, about, that yes, there will in fact be cuts ahead. And that was sort of not really any new news on that, just sort of confirmation of the notion that based on their own projections that they do expect to be cutting rates at some point during the course of the year. The real question is when and how much. Our view is that that's really going to be more to the back of the year. But then, Rob, that gets to be a tricky part of the year if you start getting into the back of the year and start messing around with interest rates. You could have an impact on something that's happening, I think, coming up here in November.
Correct. We are in an election year. So, we know the Fed, without thinking about the election part, is trying to make decisions what's best for the economy overall. And it looks like they were very successful in how they raised rates, slowed down inflation. Now they're saying, okay, we've kind of taken care of that. Eventually rates are going to come down. We're not in a rush to do it. We slowly moved them up. We would slowly move them down. So it's important, but they do balance between, okay, what's best for the economy, and based on this particular year, what's going to affect voters or what's going to affect the different parties. So they have to kind of come up with a happy balance.
Well, and that makes one of their job. I mean, that's part of their job that is most difficult, right? Because, the Federal Reserve tries to be apolitical. Jerome Powell, current chairman of the Fed, was nominated under former President Trump. The current Treasury Secretary of the Biden administration was Janet Yellen, was the Federal Reserve chairperson before Jerome Powell. So, it's hard if you're playing the game in Washington, whether you're part of the Federal Reserve or not, at some point there's always some wrinkle of politics. And in the past, particularly in an election year, the Fed has always been inclined to just sort of stay pat, if you will, for fear of losing that sort of apolitical type of mantra that it ascribes to. Although, everybody's got their opinion on that one, which makes their job. Certainly, Jerome Powell and the rest of the Federal Reserve, they got a tough job in front of them.
Well, very much, and like you said, you gotta think in terms of what's best for the economy, what's going to spook or not spook the markets or voters or the different parties. It's a balancing act, and this is a year in which they got to be real careful what they do.
And I also think that, and this segues directly into the other story that broke last week, and that is on Friday, the announcement of the unemployment data. So unemployment data for the month of January came in much stronger. There was also a significant revision upward for the month of December. So on the employment side, things look pretty strong. So that would potentially give the Federal Reserve a little bit more pause to say, wait a minute, if we can keep rates here and it's not creating any issues in the economy, particularly when you look at employment data, which is some pretty important data, then, okay, we might be able to kind of slow walk this thing and maybe avoid some of the political implications or the struggles that could happen as the Federal Reserve goes through this year.
Right. I mean, they like these numbers. They're strong. It just sort of solidifies that the decisions they made and how they moved up interest rates worked. At this point, I think they're like, let's not zig when we're still zagging because things are working. Right.
Knock on wood. So far, so good. So those are two of the three biggies this past week. The third one, which I just kind of shook my head at, when you look at the tax cut bill. So it was a tax cut bill that passed the House, did not pass the Senate. It's going to the Senate. So the House passed a tax cut bill by a margin that was pretty significant, 357 votes yes to 70 no. And we're going to talk a little bit about what the implications of that are, particularly as, given that we're in February, tax season has already started. What is this tax cut bill? What does it mean for me? And what's the implications for your taxes that you're going to be filing in the near term? So we will cover all of that, but first we got to take a break here on Dollars and Cents with Joel Garris and Rob Field of Nelson Financial Planning. In the program, we're talking about the three big events that just happened this past week that are going to have a major impact on your money. In the first part of the program, Rob and I talked a little bit about the Federal Reserve, the decision midweek to say, hey, we're going to hold rates steady, but be prepared for some rate cuts. Now the only question to sort of fill in the blanks is how many and when. Our personal view on that, particularly as we were talking, Rob, it's a presidential election year, in case you forgot that. Probably going to be a little bit more measured in how they might react to this.
Right, that's what we were saying earlier, is that it's the decisions they make have a large effect on numerous areas, so they got to be careful what the next move would be.
Might see one or two probably towards the tail end of the year. Backstop that directly into one of the other three major headlines just this past week. The unemployment data came out showing January stronger than expected. It also included a revision to December's numbers to have that show stronger employment as well. So you got some strong employment numbers that we think is probably only going to keep the Fed on the sidelines longer, because if they can get away with the rates where they are, well, then there's not really a need to cut rates if employment is still relatively strong.
Right. As we said before, what they did in the past worked, so let's stay on that course a little bit longer and then start making some decisions.
Knock on wood, hopefully that continues. The third big headline is that the House, well, first of all, this is a big headline anyway, because the fact that the House actually passed a bill, I think, is major. It also directly impacts your wallet because it is a tax bill, and they like to talk about it in Washington as a tax cut bill. But when they pass legislation in Washington, they always try and make it revenue neutral. So what may be a cut to some is going to be an increase to others. You got to watch that language coming out of Washington. They like to spin things just like anybody else. So 357 to 70, that's a pretty big passage rate when you think about the House tax bill that passed last week.
Yeah, it sounds like as they reviewed it, that they liked what they saw. It's very strong. They're going to push hard to get it going forward.
Three main concepts, if you will, that are, make up that tax bill. It expands certain business deductions, whereby certain business deductions are impacted under some of the changes that are suggested in the tax bill. It also expands the child tax credit, which is a credit that folks get if they're below a certain income level and have children under the age of 17. And then, and this is certainly something, if you are a regular listener to the program here on Dollars and Cents, you know that we've been talking a lot about the employee retention credit. We were joined last week by Christina Lamb. Early in the year, we were joined by Kristen Cayley. We talked a lot about this employee retention credit and the trouble that the IRS has been having with it, particularly with a number of organizations that's just sort of sprung up, sort of like a cottage industry, that really reached out to the small business community and encouraged them to apply for this credit, which is a pretty big credit. It's like $26,000 per employee tax credit that you could get. And unfortunately, though, as we've talked about on prior programs, there's requirements that you need to meet for that. But a lot of these sort of cottage industry of tax mills didn't really stop to walk through the eligibility and the qualification. So a lot of these employee retention credits returns basically almost kind of like a fraud thing. And so the IRS has, in September, they stopped processing. In December, they announced that folks could, take back their application for the ERC. And then in this tax bill that passed in the House, they basically said, okay, we're shutting it down. No more, no way. But here's the crazy point, Rob, and this is the thing that just every year I just, it always makes tax season more difficult than it needs to be, because some of the changes that they're putting here, particularly with respect to the child tax credit, would be on your 2023 return.
Doesn't really make sense. We're processing 2023 as we speak. People have already put together their paperwork, run their numbers, bringing it to us to help out. So asking them to wipe the slate clean, go back and redo it, it just doesn't It doesn't make sense.
Well, and then think of the logistics involved. And I remember last year there was a late amendment involving qualified disaster relief withdrawals out of retirement accounts, and we were talking about that on the show. And it came in late, and I mean, a lot of the final guidance from the IRS wasn't issued until the summer, and then we had to wait for the software, the tax software, to update. So it just became just a wait and see game. And that's my concern, is that certainly we may very well see, if there's a late change like this, that it's going to take a while to get the IRS to issue guidance, to update the tax code, to update the software. And then, lo and behold, those that try to get, hey, I want to get my taxes done right away, they're going to have to file an amendment or adjust, or who knows how all of that's going to play out. But it's really going to just create more and more confusion for the taxpayer. And you've already got a IRS that is still behind as a result of the pandemic, that it still is having problems even keeping up with processing. So I guess that's going to make life a little bit more difficult. But that's the latest. Obviously, as we know, the bill has to pass the Senate, has to be signed by the White House. So much more, I'm sure, to talk about on that. But certainly some big headlines this past week. And then I guess that's a natural segue, Rob, to kind of the topic that we're going to chat about on the program. The top of the show, we said if you have a company, and particularly a small one, then you really need to kind of listen up to kind of our next topic here, because you have an obligation to disclose the identity of the owners of your company to the United States Treasury. And if you don't follow these new rules under the Corporate Transparency Act, you're going to be hit with a penalty that goes up to $500 per day. So, Rob, share with our listening audience a little bit about sort of what the Corporate Transparency Act is. I know before the break we were talking a little bit about the design behind it is obviously to try and follow the money, right?
Right. We knew that, over the years things have gotten more regulated, especially on the business level, for activity that might be illicit, and the government wants to decrease that any way they can. So they're trying to, how do we decrease terrorism? How do we decrease activities and money laundering and tax fraud that's occurring in the U.S., maybe from outside countries that are using businesses here in the U.S. that look legit, but actually they're in place for something incorrect. Obviously, the government takes this very serious. And so they're trying to figure out where can we focus on to start. And smaller businesses is the easiest way that we see a lot of money being moved incorrectly. And so, as we said, that Corporate Transparency Act was kind of put together in 2021, and it's been rolling along. But now the government has decided, the U.S. Department of Treasury, that this year, starting in January, it's in place. People have to report. And as you just mentioned, there's some penalties if you do not follow the procedure.
Pretty significant stuff. I mean, I guess this is, Rob, you and I have been doing this long enough. I guess this is the post 9/11 world that we live in these days, isn't it?
Correct. I mean, 9/11 kind of really caught us off guard, the fact that people from other countries could come over, set up businesses, learn how to fly airplanes, from a company being taught here, and we didn't catch any of it.
Right.
And it was disastrous. And so from then on, things have been a little more careful about what we do.
Yeah, certainly around our office, I know that prior to 9/11, things like driver's license and verification of residency, there's a lot of the stuff that we do that our clients see when they come in. Yeah, we need copies of this, that, and the other thing. I often joke that we also need their blood type, although we don't quite need that yet, thank goodness. Although it might be useful. But the reality is that again, 9/11 spurred a lot of that, and that certainly has changed the framework. And so the Corporate Transparency Act is just kind of one more kind of step in that journey from 9/11 and to try and uncover what exactly is going on, particularly when it relates to illicit and illegal activity. So that's the backdrop of it. We're going to take a break. When we return from the break, we're going to talk about, what you kind of actually have to do as a result of this Corporate Transparency Act, and what your obligations are under this new legislation. So we'll return after these messages here on Dollars and Cents with Joel Garris and Rob Field of Nelson Financial Planning. New requirements that you need to observe if you have a small business. That's our topic in this segment of the program here on Dollars and Cents. So welcome into the program. We're one of Central Florida's longest running radio programs. Also a top 25 podcasts out there on the World Wide Web. So make sure you check us out on your favorite platform of choice. Once you find us, make sure you subscribe to us so that way you'll get notified when we put up new information, new shows, and the like on those various channels. Any trouble at all finding us, go to our website. It's Nelson Financial Planning, and there you'll see a bunch of icons. Click on the one that looks most familiar, and you will get automatically connected through the magic and wizardry known as the internet. So my name, of course, is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning. Joining me on this week's program, Rob Field, a fellow certified financial fiduciary, also happens to be a national Social Security advisor. Welcome on back into the program, Rob. So we're talking about the Corporate Transparency Act and what small businesses now need to do starting in 2024 under that legislation. So what are we going to have to do as in small business America to comply with this thing?
All right, so we know it's important. Government has said this is going to occur. So we did some research. We're going to share with our listeners the specifics of what it is and what they'll have to do and how it'll affect them.
Perfect.
We know that under the new legislation that businesses that meet certain criteria are going to have to submit what's called a Beneficial Ownership Information Report, or we'll call it a BOI. That's got to go to the Department of Treasury, and it's got to go through the Financial Crimes Enforcement Network, or FinCEN. That sounds pretty serious, right? A group that's enforcing network crime? Come on.
So I'll tell you a side story on the FinCEN. In the prior segment, I was talking a little bit about, some of the things that we asked from our clients, right? That we didn't have to do prior to 9/11.
Right.
And FinCEN and our familiarity in sort of the back office with FinCEN, we didn't know who FinCEN was prior to 9/11, but now we do. I would say for probably the better part of the past 20 years, every 2 weeks, our firm, as a securities broker-dealer registered under the SEC, gets an email from these folks at FinCEN, the same people that you're going to have to go online to and report who owns your company. So FinCEN every 2 weeks sends us a list of people that are suspected terrorists, suspected terrorist business, suspected bad guys, I guess is the only way to say it. And we are required to search our database for any of those names, any of those companies, any of that. And heaven forbid if we have a hit, because there's a lot of filing, a lot of contact, a lot of information. The good news is in the 20 years we've been kind of doing that, haven't had that experience, so that's good. But the reality is that FinCEN, for many people, at least in the financial industry, the brokerage side, and the investment advisory side, of course, familiar with it because there is that requirement. So now, along with like the list of terrorists that come from FinCEN, now Small Business America has to go to FinCEN and tell FinCEN who they are. Is that kind of the gist of this thing?
Correct. It's basically, who am I? What do I do? And I got to prove that
it's like a giant Santa's list. I mean, if you're on the naughty list, you're in real serious trouble. Is what it comes down to. So what's sort of considered? I mean, talk about, okay, so I got to go and I got to report the beneficial ownership of my business. What is that like? What does that mean? And who does that apply to, Rob?
All right, so who is considered a beneficial owner? Because that's what they're going after. And that, by definition, Corporate Transparency Act is saying that's an individual that qualifies as an owner if they directly or indirectly have a significant ownership stake in a company. This person either has a major influence on the reporting company's decisions or operations, or owns at least 25% of the company's shares, or has a similar level of control over the company's equity.
So basically, who's the suit or who's the owner behind that particular entity? That's what they're trying to drill down to.
Right. They want to know the owner, and then they want to know anybody that has an influence or is moving paperwork or is in charge of how the company runs. They're looking for a long list of people that are active at that company.
So tell us a little bit more. Are there exemptions? Who does this actually apply to? Like what's the parameters so our listeners can understand that?
Right. They put out a list of 23 categories that they would consider exempt, and we can share that at a later time. But for the most part, it's anything like a publicly traded company. Banks and credit unions would be exempt. Securities broker-dealers would be exempt, a public accounting firm, and then an actual tax-exempt entity. Now, they've kind of defined some large entities that could be exempt, and they're saying that would be somebody that has over 20 employees, reported annual gross revenue over $5 million, or has a physical presence in the U.S.
So I'm going to just pause right there because I want to focus on something you said in that. So large operating entities are generally considered exempt, as I understand it.
Correct, because they're already reporting a lot of different things. They're already being seen in their activities, already under review. It's the small companies that come and go that sort of have these quasi, what do the company really do? They've been under the radar screen for a while.
Well, and I guess this really kind of gets to my point, which is that this is really something that affects small businesses. Because if you go back to the definition of what kind of a large company is, those aren't necessarily particularly large companies. You've got, it's 20 employees, okay, revenue of $5 million. Those aren't necessarily overly large companies. I mean, it seems like this is targeted directly to smaller businesses, smaller companies. Because again, having a payroll with 20 people or revenue of $5 million, those aren't, in today's world, those aren't necessarily large companies like we would think of as large companies. So clearly a focus kind of more on kind of those smaller businesses. So okay. So let me make sure we got it and our listeners got it. So if you own a company, it's not exempt. And by the way, given the $500 a day penalty, you probably want to assume that you're not exempt unless you're like a bank or a publicly traded company or a securities broker dealer. So you go to FinCEN, which is a part of the US Treasury. What do you have to tell them?
You brought up the small businesses. This is going to affect 32 million small businesses. So, anybody who's like, I probably don't need to worry about it, probably lean towards, submit your paperwork.
32 million.
Is the estimate number.
Wow. So what are these 32 million small business owners going to have to report?
All right. So it's a long list, and you got to put down what's the purpose of your business.
Does it include blood type? I mean,
not yet. But I mean, this was just this is the first year. A year from now, they're going to go. You know what? We want more information. Blood type would be good. At this point, though, you got to tell them what the purpose of your business is. Who are the owners? Who are the company applicants? People that are involved with any of the paperwork. Your address, birthdays, some kind of identification number, a license or a passport, jurisdiction of the documents, where do they come from. All reporting companies are going to provide their legal name, any trademarks, their current address, and then the tax identification number. Right now, there's not an annual reporting in place. They're not saying every year you got to do this, but we're in the initial part. But even after you do the initial, anytime you have the smallest of change, you still got to submit a new report.
Right,
if
I
you
saw that. Yeah.
Change your address, your legal name, if you get married or divorced, if you got a new driver's license, all of these things, you have to submit another report to FinCEN.
And FinCEN has some very tight rules, right? It's like 30 days that you would then need to make sure that you're updating for any changes. So address changes, driver's license, whatever the case may be, you got to make sure that you're going over to the FinCEN website and updating all of that information.
Correct. It is online. The website is, and we'll refer this to a couple times. It is, FinCen or FINCEN.gov/BOI. We're going to talk next a little bit about when people have to do their initial. But for right now, once you've done your initial, if you make a change, 30 days max, and you got to report the change.
Yeah, that's okay. So I'm going to have a summary of all of this in our view from the lens of not a certified financial planner or certified financial fiduciary, but rather from the lens of a small business owner, because after all, that's what we are at Nelson Financial Planning. So we're going to continue this. We're taking a little bit longer than I thought on this, but I think it's a good topic. So we're going to continue this through this next break. So stay tuned with us here on Dollars and Cents with Joel Garris and Rob Field of Nelson Financial Planning. On the program, we're talking about the Corporate Transparency Act, probably spending a little bit longer on this than we normally might, but it is a new topic, one that we've never talked about before on the program, and it does have a major impact on small business owners in America. Rob, I had not heard that number. There's a lot of businesses that are now going to have this new filing requirement with the United States Treasury under the FinCen umbrella. What's that number again?
32 million and increasing small businesses are now going to be required to go on that website and submit all that information we were describing in the previous segment.
So we talked about the information, name, address, government issued ID, all of that kind of stuff. So now let's get down to the deadline. So the clock is ticking. And you mentioned one clock before the break. If anything, once you file, if anything changes, then you've got 30 days to make an amendment. What are the deadlines, though, for filing in the first place that are sort of rolling out during the course of 2024?
Right. So we know that beginning in 2024, they've got a limited time to do it. For a qualifying company that was established before January of 2024, they've got until January of 2025. There's your first little thing to jump
So if
through.
you are an existing company, you basically have the calendar year before you would need to file that report with FinCen.
Your first report.
Your first report. Correct.
Right.
The first report. Right.
And then they go on to say companies that are created between January of 24, where we are right now, and on up through December of this year, they're going to have 90 days to file. So now it's kind of picking up the
pace. So new company that established in 2024, you got 90 days before you have to do this.
Right.
Okay.
And then any company that's established after January of 2025, so next year, they're only going to have 30 days.
30
so
days.
Now
So
we're
the
back
30
to
days. Okay.
Yeah, so they're accelerating this pretty quickly.
That really is pretty dramatic. I guess good news. I guess you don't have to pay for it, right? There's not a fee to do this. Please tell me there's not. Please tell me there's not a fee to do this.
Right. As you and I were doing our research, we're like, okay, it's not so bad. You go online, maybe you just do a couple of questions. You don't have to pay a fee. But then we found out the number of things you have to report is huge. We also found out that if you don't report on time,
right,
these fines are, so yeah, maybe you don't pay on the upfront, but if you don't follow the rules, you're going to pay on the backside.
And this, I guess, is why they've kind of had these penalties and these consequences be as dramatic as they want people to file. This is not like something you can just ignore. This is not some survey or something like that you might get from the Census Bureau or the Economic Bureau or something like that. This is required, and they've set up these penalties to in essence force that because our research shows these penalties are pretty stiff.
Well, they are. I mean, we ran some numbers that you said the $500 a day up to a $10,000 fine. You could do jail time. I mean, if you don't report and then they find out that you're doing something illicit, I mean, it's going to it'll be painful.
Let's hope they snag a bunch of terrorists on all of this.
Obviously, that's the goal. I mean,
guess
this, if done correctly, this could be very beneficial. But if you're a small business owner who's just kind of cruising along, trying to keep above water, you've just been given a big homework assignment.
10,000 in fines and 2 years in jail because I didn't fill out a form.
I'd say they're serious, right?
I'd say they're serious. That That is for sure.
Financial Crime Enforcement Network.
Yeah,
They're doing
that is aptly named,
Right.
right? Yes, that is exactly what the words FinCEN mean. Where can someone get some assistance on this? Is this probably just kind of go to a website, or what's our best recommendation sort of on this?
Well, I mean, your first question is, where do you go? You just go to the fincen.gov/BOI. You got to go there to do the report. Now, a lot of people are thinking, I'll just go there and answer a couple of questions, that'll be fine. But the penalty, if you're inaccurate, or if you're late, or are you a business owner, are you not, are you beneficial, it's pretty painful. So we don't recommend that you go at your own. We're more likely
potentially at your peril. Yeah,
correct.
Yeah.
Right. It's you and you alone who's going to make that decision. So, especially at first, bringing in or trying to access a legal advisor is going to be a pretty smart move. Somebody who, we did a little research, and every day I keep coming to you saying, did you know this? Did you know that? It's changing quickly. So a specialist or somebody who's really focusing on this could be advantageous.
Well, and then once again, so while it is free to file the report,
yes,
once you hire somebody to help, well, then now there's a cost involved. So that becomes the problem anytime you have something like this. I guess, Rob, as we were talking about this, researching this more this past week, fundamentally, as a small business owner, just kind of speaking personally to the audience now, part of my day job is that I actually do run a small business. It's called Nelson Financial Planning, and along with that, we meet with clients and help guide them on their finances. But yeah, part of that, one of the other hats is that I am a small business owner. I certainly would not satisfy the parameters of a large company as they've defined it. And we don't have 20 employees. We got about a dozen. And so I just kind of chafe a little bit at this one. One more registration. One more thing that as a business owner you've got to keep track of, and I mean, I think about the reports, and again, I've been a small business owner for 25 years, so I think back to the reporting obligations, some of the things that we had to do back 25 years ago, and just the sheer volume that you have to do now. It's just unbelievable. And, these penalties are pretty stiff. I'm sure they'll not impose those on, somebody who just, maybe doesn't realize they need to do that or makes an honest mistake or something like that. I mean, I don't want to paint the penalties too dramatically. I think the penalties are there for folks that are willful in ignoring these obligations. But then, once you kind of start to have to seek out some guidance on these kinds of things, maybe you've got a complicated business structure that's got a lot of different owners, a lot of different partners or things like that, then that brings in the cost of compliance, which, as a small business owner, once again, that's, another cost. And then lastly, and this is kind of, I guess, more personal than anything, I always get concerned about motivation, right? And I understand, Rob, we were talking earlier in the program about, I get the genesis behind this. I mean, starting from 9/11, kind of going forward, trying to follow the money, trying to track this money that's going around the world, supporting terrorist organizations that we see are on the rise. We see that in the headlines on a daily basis. So I get the stated purpose. But the thing that always concerns me is once you have these requirements, once you have the information, isn't that just another way for government to just get involved when it comes to those smaller businesses that, as you said, it's 32 million people, 32 million businesses that this thing is going to apply to.
Right. I mean, as we've said before, the government regulates more and more, and they'll tell you it's for a good reason, but it does sort of, sometimes
there's always a backdraft. Like
right.
if you're trying to do the right thing, if you're trying to run a small business in America today, if you're trying to do all of those things, this is just one more thing that now you have to do. And that's the tough part of it. I mean, I guess from a personal view, I think I kind of want to see how this plays out, to be honest, and so again, this is because of sort of my personal take on it. These things have a tendency to change, right? If they see that there's a shortfall, or they know that they're not going to hit their number in terms of the number of businesses that are applying, I guess my personal plan is to kind of see how this year progresses in terms of these requirements and how they might play out, and to perhaps look at this and revisit this. So we're going to be talking again about this later in the year, and I'll keep you posted on kind of my personal thoughts on how best to approach it. But right now, my view is I'm going to see how this thing goes, see if they maybe extend the deadline, see if they sort of change the requirements, expand the exemption list. We'll see, but as is always the case, often in D.C., they definitely change things on a regular basis. Anyway, we got to wrap it all up and get on out of here. Thank you for listening to this week's program. Rob, thanks for joining us here on this week's program. Appreciate some of the details on the Corporate Transparency Act. And we're going to wrap it up and get on out of here. This has been Joel Garris and Rob Field of Nelson Financial Planning on Dollars and Cents.